Alright, so we're on the last topic already. Let's go to timing your trades and the ICT Silver Bullet. Now, when you are intraday trading, you want to focus on catching the expansion of the next 4-hour candle, and that is what we're going to be focusing on. So over here we've got index futures 4-hour candles, right? We have 6 a.m., 10 a.m. and 2 p.m. and specifically we're going to be focusing on the 10 a.m. and the 2 p.m. which are both ICT Silver Bullet time windows, right? Now for FX pairs, we've got the 159, right? The 1 a.m., 1 p.m., the 5 a.m., 5 p.m. and 9 a.m. and 9 p.m. But we're going to mainly be focusing on the 1 a.m. and the 9 a.m. So over here we got a crude depiction of price action. Starting off with index futures, right? 10 a.m. candle, a new 4-hour opening. We want to see a manipulation phase first into a higher time frame PDRA or previous session high or a previous 4-hour candles high. And what is going to be key is that SMT again, right? On that high, on that session low, on that PDRA, we want to see that SMT, and that is the manipulation phase, or the power of 3, right? We want to see accumulation, manipulation, and then distribution lower into that 4-hour candle. And for a bullish scenario, right, we have a 10 a.m. open, new 4-hour candle opening, ICT's Silver Bullet, right? We want to see it trade lower, making that lower wick on the 4-hour candle, then form SMT on either a higher time frame PDRA or a previous session low or a previous 4-hour candles low, and then the distribution towards the drawn liquidity, which should be higher. When we got a 2 p.m. 4-hour candle, right, ICT Silver Bullet for the PM session, we want to see a manipulation up, right, creating that upper wick on that 4-hour candle opening into either a higher time frame PDRA or a previous session high, which could be AM sessions high, or a previous 4-hour candle high. And we need that SMT to form to make it a high probable smart money reversal. And the same for a bullish scenario, right? The 2 p.m. candle, the opening price, we want to see it manipulate lower, creating that lower wick of that 4-hour candle in either a higher time frame PDRA or a previous session low or a 4-hour candle low, and then the SMT will be key in that smart money reversal over there, and then distribution higher should happen into the drawn liquidity towards buy side liquidity. So let's go over a couple of examples. We've got the Nasdaq daily chart over here, and as always we want to be marking out our discount and premium levels, right? Where are we coming from and where do we want to trade towards? As always, we want to see a higher time frame key level, and SMT is key in this area, right? So we have a higher time frame fair value gap here, this daily fair value gap. We can see price dips into it, forms SMT on this low with YM or US30. Then think about the higher time frame video, right? We want to see a closure inside the candle. We want to be aiming back into premium with this candle formation. And let's go to the next slide over here, zooming in a little bit more, right? We've got the 4-hour chart here from Nasdaq, and this gray box is that higher time frame level, right? So we already had SMT formed on those lows into a key level, which is that daily fair value gap. And now over here on the 4-hour chart we also form SMT on these lows, right? So we have higher time frame into lower time frame SMT, which is a very powerful tool to be using. Now think about the opening price of the 10 a.m. candle, right? We want to see a manipulation lower into either a higher time frame key level or previous session low or a 4-hour low, right? So we've got over here the London session low. So let's zoom in a little bit. Let's go to the 5-minute charts to see what does that actually look like, right? We have the whole narrative right now. We've got that higher time frame key level, which is the daily fair value gap. We know the 4-hour candle opens up over here, right? So what do we want to see? We want to see a key level hit or a previous session low hit or a previous 4-hour candles low. And now price opens up over here, takes out London session lows, right? And we can see price declining, and we also have 3 drives down here, right? 1, 2, 3, and then we can see price breaking structure and finding support on that breaker. So this is an opportunity where you can go long. If you want to trade second stage distribution, you can also wait and see that breaker be respected for another leg up, right? And then you can catch the next PD array, and in this case that is an order block with a fair value gap, right? Very powerful combination as well. And then we can see the 4-hour candle keeps going up and up and up. So from the 4-hour candle opening, the manipulation, previous session low, and then distribution up higher, making that the power of 3 of that 4-hour candle. So over here we've got another example. We've got the ES daily chart. Again, as always, discount premium. We want to know where are we coming from and where are we going, right? So SMT is key, right? We want to have that SMT on those highs if we are looking for a bearish reversal. So we're closing below this area down here, so we're breaking structure as well. So let's zoom in a little bit more. Right, still on the daily chart, but we want to be focusing on this piece of price action, right? We've got a daily fair value gap and a previous daily high run, right? And we're closing below in the range, SMT on the high, so that makes for a high probability bearish move next. And we want to be zooming in a little bit more and see what that looks like, right? So let's go to the 4-hour, and again, like I just said earlier, if you couple up higher time frame SMT with lower time frame SMT, that makes it very high probable, right? So we have that SMT again on this high towards this high, and then we can see that 10 a.m. candle opening, right? We want to see either previous session high or a key level hit, or a 4-hour previous candles high rated and then closing in the range, right? And also think about the swing point video. We see the rate on the high, so we have candle 1, candle number 2 has to close inside of the range, right? And then you can see the next candle's expansion should be towards this candle's low, and we can see the draw on liquidity is lower anyway, so that is a very clear draw on liquidity. So let's focus on this a little bit more, zooming in, right? This is a 5-minute chart. We have a market maker sell model. Nice consolidation down here, relative equal lows, so we got a clear draw on liquidity. Price starts to accumulate, push up, and then eventually rating this high. And again, SMT, right? SMT is key in a reversal, so taking out this high, SMT, and then we're breaking down structure over here. So 10 a.m. candle, right, opens up, trades down lower and up into that high, right, with SMT, so rating previous 4-hour high and then breaking down structure and closing inside, right? So you can see that 10 a.m. candle opening up, right? So it trades lower first, then takes out that high, which is a previous 4-hour high, and then again SMT is key in this area, right? Then focusing on this little piece of price action over here, break of structure down here, price trades up, takes out a high, so we have a purge on liquidity, right? Break of structure, and it leaves down a fair value gap. Then price trades down lower and creates a change in the state of delivery, so we have an order block here, and then price declines down lower and lower and lower. Now 10 a.m. we can find an entry, right, because we develop structure properly. Now if I look at the 2 p.m. opening price, it just melts down and there is no way to catch this, and that is okay. You gotta really see your structure form as well and all the things you need, and if it just keeps melting, you're just gonna let it run. There's not always a trade opportunity with a 4-hour candle opening price, right, or taking out a previous 4-hour high. Sometimes that doesn't happen, and then there is no trade that's set up, and that is fine. Then we sit on our hands. So let's talk a little bit about FX dollar pairs right now. The only difference right now is the 4-hour candle's timing, right? So now we're going to be talking about the 1 a.m. candle, and this is London sessions 4-hour candle, right? So we want to see London sessions 4-hour candle trade up into either a higher time frame PD array or a previous session high or a previous 4-hour candle high, and this previous session high could be Asia range, for example. Now on that high we want to see SMT formed, right? High probability for smart money reversal, never sleep on SMT, and then the 4-hour distribution should happen down lower. Now for a bullish example, right, we've got the 1 a.m. opening of that 4-hour candle, right, the London session candle, 4-hour candle, price trades down lower into either a higher time frame PD array or a previous session low, which could be Asia session, or a previous 4-hour candle's low, and then with that SMT on that low we want to see a distribution phase happen towards the drawn liquidity, which should be higher. And for a bearish scenario, we've got a 9 a.m. candle, right? This is the New York session candle, 4-hour candle. We want to see it trade up higher in either a higher time frame PDRA or a previous session high, which could be London session, right? And then or either a 4-hour candle high and then SMT again formed on those highs, and then price should distribute down lower. And over here we've got a 9 a.m. candle, right? That New York session 4-hour candle. This is a bullish example again, right? We want to see price trade lower into a higher time frame PDRA or a previous session low, which can be London session, or a previous 4-hour candles low with that SMT, makes it higher probable. Again, keep repeating that, that's very important. Then the 4-hour distribution should happen down lower. Now for a bullish example, right, we've got the 1 a.m. opening of that 4-hour candle, right, the London session candle, 4-hour candle. Price trades down lower into either a higher time frame PDRA or a previous session low, which could be Asia session, or a previous 4-hour candles low. And then with that SMT on that low, we want to see a distribution phase happen towards the drawn liquidity, which should be higher. And for a bearish scenario, we've got a 9 a.m. candle, right? This is the New York session candle, 4-hour candle. We want to see it trade up higher in either a higher time frame PDRA or a previous session high, which could be London session, right? And then or either a 4-hour candle high and then SMT again formed on those highs, and then price should distribute down lower. And over here we've got a 9 a.m. candle, right? That New York session 4-hour candle. This is a bullish example again, right? We want to see price trade lower into a higher time frame PDRA or a previous session low, which can be London session, or a previous 4-hour candles low with that SMT, makes it higher probable. Again, keep repeating that, that's very important. And then a distribution phase should happen up higher. So let's go over a couple of examples, right? We've got a Euro USD daily chart over here. We're marking out our premium levels and our discount levels, which is down here. Then we've got, think about the previous lessons, right? That candle formation of the swing points. You've got this candle's low getting rated, and important that the candle closes inside of this candle's range, right? Now we know we can focus on the third and the fourth candle to reach this candle's range high. So let's zoom in a little bit. So over here we've got the Euro USD 15-minute chart, clear market maker buy model, right? Think about the daily time frame again, right? That swing formation. We can see day number 1 over here, then the second day rates the low, and importantly it closes inside, right? Over here closed inside. So once the daily candle closes above this blue line, we can anticipate the next day to go for this range high, which is that first day's candle. And where are we going to be looking for opportunities, right? We wait for that 4-hour candle opening. We want to see either a higher time frame key level hit or a previous session low or a previous 4-hour candles low. And in this occasion we've got a previous London session low, right? Previous day London session takes out that low, and then SMT, right? That is key. We want to see that SMT, and then from there on out the 9 a.m. candle opens up, right? Rates it, then break of structure, and you got a breaker over here where you can take a trade from, and that is all you need to be waiting for. So over here we've got another example. We've got a GBP USD daily chart marking out the range low down here, right, and a range high. We know we want to be targeting that range low, right, at the relative equal lows after range high gets purged. Again, SMT formed on the highs, making it a higher probable smart money reversal, and then drawing a new range over here. So we are in discount down here, and in premium up here. We have a premium order block as well, and then we're going to be focusing on this piece of price action over here, and specifically on this candle. So zooming in a little bit more, right, GBP USD 4-hour chart. We want to be focusing on that 9 a.m. candle, right? So either a previous session high or a previous 4-hour candle high or a higher time frame key level. So in this occasion we can see this candle, right, the 9 a.m. candle takes out a previous 4-hour candle's high and then starts to decline. So we can see the manipulation phase going up here and then the distribution phase down lower. So let's zoom in a little bit more because we're focusing on that 9 a.m. candle, right? We've got a market maker sell model going on, and I think this was actually CPI, so we can see a massive drop down here. Now if the 9 a.m. candle opens up and rates that high, right, how are we gonna catch this? In this occasion we're not gonna catch it, right? This happens as well. So this is just to show you that this is how the market makers book price before they run it towards a target, right? They want to have the power of 3, the double purge, and then a previous session high or a 4-hour candle high, right? That's how they book price, to smash it down lower and completing that market maker model. So not always there is a entry. Now let's talk a little bit about Asian pairs, right? We want to be focusing on 9 a.m. or the 9 p.m. candle, and Asian session pairs can be something like AUD JPY, GBP JPY, or AUD CAD, right? We want to have the JPY, the AUD, the NZD. Those are Asian session pairs. And again, we want to see that opening price, right, going up higher into either higher time frame PDRA, a previous session high, or a 4-hour candle high, and that SMT needs to be present, and then the distribution phase down lower is more probable. The same thing for a bullish example, right? We want to focus on the 9 a.m. and the 9 p.m. candle, right? Trading down lower in a higher time frame PDRA, or a previous session low, or a 4-hour candle low, right? And then that SMT is key for the distribution phase up higher. Right, so over here we've got AUD JPY, so that's an Asian session pair, right? We're on the daily chart over here, mapping out where should we go and where is most likely to go. And we've got our discount and premium levels, right? We've got our range low and our range high over here. You can see this range gets purged, right? And we have SMT formed on these lows, so that's a high probability smart money reversal. But what do you see in this candle formation, right? What is important over here? Right, we close inside of this candle's range. So this candle is important, right? After we rate that sell side liquidity with SMT, right, we can see this candle is closing inside of the range of candle number 1. This is very important. So we can focus on the 3rd and 4th candle expanding up higher and targeting that range high, which has buy stops above it. Right, so over here we've got a 4-hour chart, right? And just to show you guys how the 4-hour candle opens up and where it should trade towards after we have that higher time frame narrative, right, and that liquidity purge and the manipulation phase. So we hit a higher time frame key level, right, with this 4-hour candle, and we can see that the 9 p.m. candle trades up higher into the drawn liquidity, which should be higher. So same thing over here, right? We've got the 9 a.m. candle opening. We can see it making a lower wick into a key level, which is this order block, and then it's expanding up higher towards that range high, which has buy stops above it. And over here the 9 p.m. candle, same occasion, very close to buy side liquidity already, and it finishes off this move. So now let's talk about ICT Silver Bullet, and we're going to be removing the veil. Why does he pick these specific times, right? Now we know these are new 4-hour candle openings, right? 10 a.m. and 2 p.m. both ICT's Silver Bullet window. Right, so over here we've got a crude depiction of some candlesticks, right? But what is important is how these candlesticks form, right? We're going to be focusing on the 10 a.m. because it's index futures, right? That is the ICT's Silver Bullet window. Now what happens prior to that 10 a.m. candle is key. We want to see that 8 a.m. candle low rated by the 9 a.m. candle. And what is also key, we want to see that 9 a.m. candle close inside the range of the 8 a.m. candle. So we can target that 8 a.m. candle's high by trading and finding an entry on the 10 a.m. candle, which is over here, right? We want to see that power of 3, right? Making a lower wick, manipulating, and then distributing up higher. And the same thing for a bearish scenario, right? We're going to be focusing on that 10 a.m. ICT Silver Bullet, but what happens prior is important. We want to see that 8 a.m. candle's high rated by the 9 a.m. candle, and then the 9 a.m. candle needs to close inside of this range, and then we know we can trade the power of 3 of the 10 a.m. candle, making a manipulation phase higher, hitting either a PD array of some sort and then trading down lower. Now for the PM session, right, the 2 p.m. candle, we want to be rating that 1 p.m. candle's low, and then important, we want to close inside of this one, right? We want to close inside of this candle, so we know we have that swing formation, and then the 3 p.m. and then the 3 p.m. candle should be a manipulation lower, but respecting this low, right? And then the distribution phase should happen upwards. And for a bearish example, right, we want to have that 1 p.m. candles high rated by the 2 p.m. candle, and importantly, 2 p.m. candle needs to close inside of the 1 p.m. candle, and then we can trade the 3 p.m. candles power of 3, right, manipulation higher, and then a distribution down lower. So over here we've got a Nasdaq 1 hour chart, and we're going to be focusing on that swing point, right? We can see it already over here. We want to map out the 8 a.m. candle range. We can see the 8 a.m. candle over here, buy side above it, sell side below it. So always think about order pairing as well and how those swing points form. We've got a 8 a.m. candle low rate by the 9 a.m. candle, and what is important, right, we want to see that candle close inside of the first candle over here, the 8 a.m. candle, and then 10 a.m. is the silver bullet window, right, and we want to see an expansion higher respecting the 9 a.m. low and then rating the 8 a.m. candle high. So if you zoom in a little bit more, right, we've got this 60-minute chart, right, the 1 hour chart of Nasdaq. We can see price action over here dipping in the fair value gap CE, which is the 50% level of that fair value gap. So let's outline the range we're trading with, right? We've got the range high up here, and then this range low gets purged, right? So what timing do we get over here? So over here we can outline this candle's range low, right, and the candle range high. So we know we want to be taking out that candle's range low first, which is the 8 a.m. candle low, right? So the ICT Silver Bullet is the 10 a.m. candle. We can see the 9 a.m. candle taking out the 8 a.m. candle low in a higher time frame key level, which is this fair value gap CE, right? And closure inside of this range is very important. So now when the 10 a.m. candle opens up, which is the ICT Silver Bullet window, we can look for a trade opportunity targeting that range high, which is up here. So how does that look like if we zoom in on the lower time frame? Over here we've got a 5-minute chart, right? Again, 8 a.m. low needs to get rated and then close inside of the range. And we can actually see the 9 a.m. candle rates the low into that key level, right? That fair value gap CE, which is the 50% level of that fair value gap. We can see because of that rate, there is a high probability order block formed over here, right? And then we want to either trade this candle here, which is not the 10 a.m. candle yet, because we want to be focusing on the 10 a.m. candle, and we can actually see this is the second stage distribution, right? So 10 a.m. candle opens up and then forms a fair value gap, and then we can take entry on that fair value gap, and then it takes out the range high because we know the range low has been rated already. So we want to be pairing up those sell stops with the buy stops resting above it. Right, another example over here, we've got the ES chart. This is a 1 hour chart, and we can focus on that 10 a.m. candle, right, the ICT Silver Bullet time window. We've got candle number 1, the high gets rated, right, this is the 8 a.m. candle, rated by the 9 a.m. candle. Then price closes inside of this candle, so we now know we want to target this candle's range low, and this is the focus, right, this expansion down lower. Same thing down here. We've got that 8 a.m. candle, right, gets rated by the 9 a.m. candle, and again, important, we want to be closing inside of this first candle's range. Then we know we can target that candle's low, and that is the 10 a.m. ICT Silver Bullet time window, so we're going to be focusing on this candle's expansion. So if you take the opening price, right, where do we want to go? We want to manipulate up higher, right, and then go down lower and distributing. And that's just like the same thing over here. We want to open up, make a higher wick, and then continue down lower. So if we zoom in, we've got a 1-minute chart actually over here, the ES 1-minute chart. Buy stops rated, right, over here, that 8 a.m. candle taken out by the 9 a.m. candle, then closed inside, and then once the 10 a.m. candle opens up, which is over here, right, trade up a little bit higher, then forming a fair value gap and breaking structure. And again, higher time frame SMT coupled up with lower time frame SMT is key and very powerful. So we can see actually the SMT form here, and now we know after we take out the buy stops, think about order pairing, right? We want to pair up the buy stops with the sell stops resting below it, and this fair value gap is the opportunity in the ICT Silver Bullet window, the 10 a.m. candle. So here another example, right? the ES 1 minute chart, after we run 8 AM candles high, right, we see the buy stops taken out, and then closure inside is key, right, then price breaks down lower and lower and lower, forming a high probability order. 10 AM opens up, trades into the order block still, and then trades down lower, forming a fair value gap. So there's another opportunity to get in, and then targeting those sell stops on the range low, right? Again, order pairing, accumulating those buy stops and pairing them up with the sell stops down here. Alright, so let's talk a little bit about Forex New York candles, right? Normally we want to be focusing on that 7, 8 and 9 AM, but if there is high impact news, the timing moves up a little bit. So we're going to be focusing on the 6, 7 and 8 AM candle, because we want to see that distribution happen with the news release, right? And the same thing for a bearish scenario, we can have a 7, 8 and 9 AM candle formation, but if there is high impact news at, let's say, 8:30, we want to be focusing on the 6, 7 and then the 8 AM candle being the distribution candle. So again, always with the swing formation, we want to close inside of the range, right, as you can see over here, and then the third candle should be a distribution. And for Forex London, right, we're going to be using the 1 AM low getting rated by the 2 AM candle, and the 2 AM candle needs to close inside of the range, so we can trade the 3 AM candle, which can be a distribution up higher in this occasion. And for a bearish example, right, London session, we want to see that 1 AM candle high rated by the 2 AM candle. 2 AM candle has to close inside of the range, right? So now we know we can trade the distribution phase of the 3 AM candle. And think about it, we want to have SMT on this highs as well, right, making it a higher probability, and the candle needs to close inside of the range. So let's go over a example. Over here we've got a range high, right, over here, and we've got a range low. Zoom in a little bit more, range high and range low. We can actually see this range low gets rated, right? We can see the 1 AM candle gets rated by the 2 AM candle. Then importantly, we close inside of the range, right? And then the 3 AM candle, which is the ICT Silver Bullet candle, makes a lower wick and then continues distributing up higher based on what this 1 AM candle provided with us, right? 1 AM, 2 AM rate into closure inside of the range, so we know we need to target this range high and eventually this range high up here. So how does that look like if we zoom in a little bit more? Where do we catch an entry? So this is the GBP CAD 5-minute chart, right? And think about what we want to see with that 4-hour candle, right? We want to either see a higher time frame key level hit, or a previous session low, or a previous 4-hour candle low, and then we're going to trade the distribution up higher. So over here we can see, if we map out New York midnight opening price, right, we want to be a buyer below it. Ideally we can see this is candle number 1, right, a 1 AM candle. Then the 2 AM candle rates the low and then closes inside of the range. We're leaving a fair value gap behind after we take out Asia session low, right? So the step-by-step approach is working out over here, right? Then price distributes up higher and taking out those buy stops over here after hitting that fair value gap, and then the 3 AM candle, right, the ICT Silver Bullet, goes towards that range high over here.